RBI Deputy Governor Acharya has argued the need to protect the independence of the central bank.
Dr. Acharya builds a case for central bank independence by pointing out to 2 or 3 cases in history where countries paid dearly for not abiding by the independence of their central banks.
I think there must be some mechanism to come out, some understanding that this is the way the dividend will be distributed.
The Reserve Bank must be protected from temporary issues.
It's an irreversible conflict between governor and government. Governor, rather than given, will perhaps allow himself to be sacked or quit.
In many ways, it questions the credibility of the economic framework in the country.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh. With me are Anuj and Sonia, and we have the news that is flashing on the screen for you. There is no certainty about developments, but the reports that we are picking up is that the government has probably used Section 7 of the Reserve Bank Act. It is a section so far never used, which allows the government to direct the RBI to take a particular step. And because it is not used so far, the buzz is that the governor may resign, may consider resigning. All we got from sources in RBI is all options are on the table. No event has happened, but the buzz is that because Section 7 was used, probably the governor is even considering quitting his job. We have no certainty at all. We have written to the PMO, to the government and to RBI, and we have not got any response just yet. So that's all we have to report at this point in time. A big news, but we don't know if it is news yet. Hi, both of you.
Hi, good morning. Good morning, Anuj. Of course, it's an evolving story and it could cause volatility until it happens, when it happens. In fact, it's causing volatility now. Look at the SGX Nifty. It was up about 60 odd points about half an hour back, and now it's lost all of those gains. But having said that, there could be a pullback rally as well, because there are a lot of positive cues this morning. There was a big rally in the Dow overnight, about 430 points higher. Donald Trump has signaled that, the US is ready to ease trade tensions with China. Crude prices have moved lower. That's always a good thing. NYMEX crude is at a 10-week low, and Bank of Baroda numbers were also good. So there are some positive cues, and of course there's this overarching theme of the possibility of the resignation as well. Anuj, morning. Too many things to talk about. How do you think the markets would move? Because the Asian markets are doing really well. Japan is up almost 2% right now. You think we could see a pullback rally, and if that does come through, will it sustain?
Morning, Sonia. My base case for last many days now has been the markets made some kind of bottom. It might not be the ultimate bottom, but near-term bottom has been created at around 10,000. And if you see this month, the Nifty is down 6.7%. The mid-cap index is down only 1.7%. So that way, the base case, and that's the base case, is that there's some kind of bottom formation at around 10,000. And, if you buy closer to that, the risk reward is in your favor, like it was 2 days back. And like, we kept discussing in closing bell yesterday, the index was down, but mid-caps did well yesterday. So clear signs of portfolio build-up over the last one fortnight or so. Your strategy should be to carry the longs that you may have created over the last 2 or 3 days with 10,000 as your stop, and perhaps add long positions on dips. I would want to see the market's reaction. So far, only weak shorts have covered, but big short covering is yet to happen, and the market's verdict is ultimate at the end of the day, and let's see how that one shapes out. Just a limited point, sometimes when you hear too many noises around institutions, that actually provides the best buying opportunity. A case in point was when that whole Supreme Court judge issue happened. You had a big rally after that. So let's see. I think the market's reaction would be important.
The previous instances when we had Brexit, Rexit, and Trump election, all events which the market was unprepared for. The market was in the throes of a very big liquidity rally, which we were to realize only later, throughout 2017. Now it is coming in a backdrop when countries where central banks have not been allowed to hike rates, like in Turkey, the market actually punished them. So the backdrop in which, if there is a huge liquidity wave, then maybe the market is able to take all news in its stride. Now it is a liquidity contraction, wave that we are in, or whatever trend that we are in. So it might be a different reaction this time around. And well, let me once again tell you, no event has happened yet.
Yeah.
What we have been given to understand that Section 7 has been invoked. And that is a very serious challenge for any RBI governor, because it has never been done before. No governor will want to go down in history as someone who took directions under Section 7. It can be an event that can, make a person take an extreme decision. It can be. So we have two speculations. Has Section 7 been used? And if Section 7 has been used, will Dr. Patel find it difficult to continue?
So in earlier cases, in global cases, when, the central bank's independence has been stifled, has it affected equity markets more, or do you think it's more to do with the currency, money market
I'm just being an instant historian over here. We have seen instances in Argentina, which Viral Acharya quoted, where it doesn't happen immediately. No foreign investor comes and takes out money immediately. You want to see who's the next governor. If it's a person of extraordinary stature, if the RBI's capital is not touched, if major changes don't happen, then, when Narayan Malhotra resigned, of course, at that time we were not globalized at all. We had no concept of FII. There was no foreign investor. And there was no showdown. He just went and met Prime Minister Chandrasekhar and resigned the next day. So, there was no showdown. We were not globalized. There were no foreign investors. Markets were not deep. And therefore, these things did not matter. So, as Anant Narayan, whom we spoke with earlier, said, this is out of syllabus. Yeah. So, we do not know how it will react. We cannot compare with maybe Turkey and Argentina all the way. No two examples in history will be identical. So, we need not react like Argentina. We need not react like Turkey. Can be a very good argument. Likewise, yes, we will react like that can be a good argument. I think we should allow history to play out and then just record it.
Okay, there's so much happening today, right? There are a lot of big numbers, by the way, for whoever's interested. L&T, Tata Motors, Lupin, all coming out with their earnings today. And guys, there's a new iPad Pro, a cheaper MacBook. I mean, for all you iPad lovers. We forgot about that, right? But let's take a look at what our wise experts have to say as we head into trade this morning. Ridham Desai of Morgan Stanley says earnings season seems to be moving steadily with a 61% beat ratio versus their estimates. With 50% of the Sensex companies yet to report, thus far revenue growth for the Sensex is at a 6% year-on-year, and net profit growth is just 1%. Ridham adds that excluding Bharti Airtel and ICICI Bank, the net profit growth is at 10% year-on-year.
Okay, I'm giving you a money market view, but I can tell you that my heart is not in this, because the person who gave this view, Pravit Brahmabhat of Veracity, would not have accounted for the slew of events that has happened, or slew of speculation over the last 1 hour. So Pramit says, morning news not being true, the dollar is showing strength against its peers, and this will put pressure on the rupee. He expects the USD-INR pair to trade in a range of 73.50, 73.80 for the day. But this is ceteris paribus. And likewise for the bond market. Yes, likewise. Dhaval Dalal of Edelweiss says that positive momentum in the government bond market continues, with the RBI announcing further increase in the open market operation bond purchases. In November, the relative stability in crude and forex and signs of normalcy in the money market has returned. He says as a result, the 10-year benchmark bond yield has trended towards 7.8, and improvement in the lending conditions have also contributed to positive sentiment. He expects the 10-year benchmark bond yield to trend towards 7.75% in the near term.
Okay, global cues are strong this morning. Of course, we'll have our own cues to react to, but here's Mangalam with the world view.
That's right. So a good outing for people on the Wall Street in terms of gains coming in. 430 points on the Dow, 41 points on the S&P, as well as the Nasdaq too ended higher by about 1.6%. Remember, there were some comments coming in from President Trump on easing of trade tensions, and which is what led the key sensitive to that, the key stock which is sensitive to that, Boeing, higher. So the stocks like Boeing, McDonald's, as well as Goldman Sachs were the ones which outperformed the blue chip index. In terms of a couple of other stock reactions, General Electric That one fell about 10%. In fact, fell below the $10 mark for the first time in the last 9 years on account of SEC expanding its probe into the company's accounting practices. Coca-Cola reported their numbers, 30% jump in the profit, and that was taken positively by the street. Across the Atlantic, though, we saw mixed cues coming in. The DAX as well as the CAC were lower, while the FTSE was higher. The DAX was led lower by Lufthansa, which was down by almost 8% after the earnings missed estimates. So it's not just the Indian aviation companies which are reporting weak numbers. Across coming back to the Asian markets, most of them are in the green. However, they moved a little off the highs of the day. Our markets reacting only to our cues. In fact, we were up about 0.7% on the SGX Nifty at the open, and from there we've slipped a bit, just about flat as we speak.
Okay, thank you very much. Now, this is very important. I think we should have Shireen on phone as well. Shireen has reported that the government sources have told her Section 7 has not been invoked to date. Now, that to date is important, which means it has not been invoked yesterday and has been invoked as of today. So it looks like even that is in the realm of speculation. If it is invoked, and then what will be the reaction of the RBI is what we have to see. So not been invoked to date is what Shireen is reporting from the government. I think we have Shireen. Arvind Sanger, of the managing partner of Geosphere Capital Management, and Paul Kitney, chief equity strategist of Daiwa Capital Markets, are also with us. Gentlemen, do stay on. We are in the throes of probably breaking news, and we do not know if that news will break at all. The speculation is that the government is probably going to direct the RBI to do some action which the RBI is resisting, and the speculation is that in response to that, the governor could resign. This is what we are picking up, but let me hand it over to our managing editor, Shireen Bhan, who has been speaking with government sources. Shireen, what have you picked up?
Well, remember the first time that we heard of Section 7 and the impossibility of the invocation of Section 7 was during the power matter which was taken up by the Allahabad High Court. Now, the Allahabad High Court order, as an option, had said that consultation with the RBI could take place under Section 7 of the Reserve Bank Act. At that point in time, government sources had made it very clear to us that there was no intention to go through with the invocation of Section 7. What we are now given to understand, and what news reports are suggesting, is that Section 7 has already been invoked, but government sources tell us that there has been no invocation of Section 7 to date. The consultation process has been initiated because under the RBI Act, even to invoke Section 7, you need the RBI on board, and you need to engage with the Reserve Bank and the Reserve Bank governor specifically. So we are given to understand that to date, the section has not formally been invoked. A conversation and consultation may be on. So it might be premature at this point in time to suggest that formally Section 7 has been invoked.
Okay, I can tell you that there have been at least 3 instances where governors themselves have told me that finance ministers have threatened that you don't do this, we have Section 7, but finance ministers don't normally invoke it. I'll read it out for the benefit of viewers. Section 7 of the RBI Act empowers the government to consult and give instruction to the governor to act on certain issues that the government considers serious and in public interest. The section is invoked in consultation with the governor. So, that is very important, but it doesn't make a big difference. When I asked RBI sources, they said, yes, they'll consult. The governor said, I can't do this specific act, and then the section gets invoked. So the consultation is not a very big hurdle to cross. It's only a letter that the government has to write to RBI. The problem with invoking Section 7 is it is unprecedented. Even at the face of severe differences in the past, it was not invoked.
No, it's not been invoked till now. So then, what are we discussing in that case?
The possibility of it being invoked. Okay, the possibility of it being invoked, and what happens if that were to happen. Well, thank you very much, Shireen. We will keep coming back to you and see how the day... I would really wish it the way you're saying it, Anuj, that it is not invoked at all through today, and therefore there is no resignation. But what we are discussing is, if that happens, how may the markets react? Over to Arvind.
Yes, we do have, in fact, 2 guests joining us. Arvind Sanger, the managing partner of Geosphere Capital, and Paul Kitney, the chief equity strategist of Daiwa Capital Markets. Gentlemen, thank you for taking the time out. Arvind, good morning. The differences between the RBI and the centre have now perhaps reached a boiling point, but it underscores a long history of disagreements that we know of. How do you see this impact the country's image if there is a resignation impending, and what would the consequences be for the markets?
Well, I really don't want to speculate on rumors, but, clearly the reality is that we have seen in the U.S. itself President Trump be extremely vocal about his disagreement with the direction taken by the U.S. Fed. So it's not surprising that governments around the world, and I guess India is no exception, where the governments and central bankers are not seeing eye to eye as the liquidity flood that has propped up economies and made people feel good. As that liquidity is ebbing, politicians are looking for people to blame, and central bankers have become, I guess, a popular whipping boy in many countries. Turkey is obviously another example. I hope, and my expectation and hope is that India will not join that club and do anything dramatic. But I guess we'll find out. I certainly am hopeful that good sense will prevail on all sides, and there will be nothing untoward. Okay.
Well, just because of this speculation, do you think? Let us assume this era, this mood of uncertainty continues for a day or two. Do you think people will take decisions in haste in that space?
I would think not. I mean, we certainly are not going to start trading on rumors. Clearly, the deputy governor's speech on Friday did lay out in stark terms some of the disagreements between the government and the RBI. But, we've had periods of tension before of RBI governors not being very popular in the finance ministry or the prime minister's office. So those episodes have come and gone, but we have not seen any fallout that is as severe as what you're suggesting may be coming. So I'm hopeful that this disagreement too will be resolved with some mutual give and take.
Okay, we hope that plays out as well. Paul Kitney joins in too. He's a chief equity strategist of Daiwa Capital. Paul, would you base your investment rationale on the eventuality of this this story?
Right. So, good morning. I think what the previous speaker said makes a lot of sense to me. I think, first of all, I agree that at the moment it's just a rumor and speculation. So one would not want to make any particular investment decisions based on this. But let's think about the hypothetical here. So if we look at central banks, the reason why there is central bank independence or central bank independence that's being set up globally is to divorce the central bank decision-making and their primary mandates, which are focused on dealing with inflation and inflation targeting, are not linked at all with political decisions. And so, as a result, we've generally seen central banks, both in emerging markets, with some exceptions, and also in developed markets, sort of act, rather prudently in that particular fashion. Now, when inflation targeting is put to the side, then there is the prospect there of overheating economies. Now, in the case of India, I don't really see that as being a major problem. So I don't see inflation actually near term as being a big problem, primarily because of the fact that there is weakish agricultural prices, and also the fact that the central bank's policy rate, the RBI's policy rate at 6.25%, 6.5%, is still well above the inflation rate, which has been ticking down, and as of September was below 4%. So you've got a real positive policy rate there, which is cramping demand or holding that down. Now, having said that, if there was, and frankly, I think the RBI is doing a good job. So if there was, let's say, an easier monetary policy imposed in India at this particular point in time, then that sanguine outlook for inflation may well be altered, and that might affect the currency as well as inflation going forward. But again, one wouldn't want to speculate on that.
Sure. Let's not speculate on that. Arvind, good morning. Your thoughts on market, because we've seen some kind of bottom formation, not just for our market, but for the rest of the emerging market as well. And, over the last few days, there's been quite a bit of outperformance from the broader market as well. Do you reckon the worst of the price damage might be out of the way?
Well, it certainly looks like global markets are oversold. There's been such a sharp correction so quickly that we are getting some rebound from that. I think the real question becomes one of how much of the sell-off was sentiment-driven, and how much of it could be driven by fundamental concerns. And if it's sentiment-driven, then the rebound has legs. If there are fundamental concerns, then the rebound itself could be a dead cat bounce. So I think we're more in the camp that global growth is still relatively intact. There's going to be change in leadership to some extent as we get later into a cycle and as we get further into the Fed interest rate cycle, and the implications of easy liquidity going away are negative for some sectors. But I don't think the economic growth or the earnings growth cycle is coming to an end. So our expectation is that this will be a choppy rebound, but at least in the short term, the worst may be behind us. But, I think in India's case, we're a little bit more nervous about the implications of the liquidity tightening in terms of the economic growth outlook and therefore the earnings outlook going forward.
Okay, Paul, assuming that the government and the RBI showdown doesn't result in any major accident of anyone quitting, and that it is, comes close to a showdown but doesn't result in anything bad, what would your approach be to the Indian markets now? Are there sectors that are looking attractive after the fall? Do you think 10,000 is bad enough and the Nifty won't dip much below?
Right, so we haven't changed our view, and we're not going to change our view, based on this type of issue. So we've been overweight India all year. We actually increased our weighting in India, in Asia ex-Japan, in mid-year to be our largest overweight in the region. And the main reasons behind that, as I mentioned before, is that the inflation environment actually, despite the higher oil prices, and the weak rupee, is actually fairly benign due to positive real policy rates and also weak agricultural prices. So we also think that the RBI is doing a good job in terms of its focus on monetary policy. We see earnings growth in India being at near sort of the top of our sort of group of countries that we follow. Valuations are trading at a bit of a premium at around 15 times earnings, but we think that the fact that the Indian growth profile, not being geared to the trade cycle, deserves a significant premium. Now, the sectors that we like are industrials. We also like consumer discretionary, and selectively in some of the higher quality financials.
Okay, so industrials and consumer discretionaries. Arvind, I wanted to ask you your views on corporate banks, because we've seen an improvement as far as earnings are concerned. Names like ICICI Bank, Bank of Baroda reported such a big drop in slippages. Do you think this space has turned around?
Well, it clearly looks like that the NBFC's loss is going to be the bank's gain. And in addition to that, that would be for, mostly the private sector banks, maybe a few better run public sector banks. But on the other hand, the other thing also to keep in mind is that the worst of the big NPAs is behind us, and we're seeing some pretty decent resolution out of NCLT in those cases. So I think that there are many reasons why the corporate banks and certainly the ICICIs and the Axis are benefiting. And, you also have dislocation among some private sector banks like Yes Bank, which are, again, leaving a few people standing. And therefore, I think that does create more of a cyclical opportunity and a secular opportunity for, certainly for an ICICI Bank and maybe even some of the PSU banks like Bank of Baroda or State Bank, which are some of the better run public sector banks. Okay,
now before I let both of you go, just tell us how you would react if the news were right. If it comes to the resignation of the governor, Arvind, what would your reaction be?
Well, I prefer not to speculate, but I certainly can't imagine it would be positive.
Okay. Paul, if you were to get such a news at all?
So should that event take place, it would be considered a negative factor in our evaluation matrix.
Okay. All right. Let's hope it's not true. But all we know for the moment is that there is a major disagreement and what someone described as irreversible. Thank you very much, Arvind Sanger and Paul Kitney, for joining us. Things are otherwise positive. The Wall Street rally is being replicated, if not to the same extent, in the Asian markets as well. Crude is at 76. The results that came overnight after market were good. So other things are positive.
But you know, the SGX Nifty, about an hour back, it was up 60 points. It's now moved into the red. So would that be a bit of a volatility?
Yeah,
initially,
it will of course be. I think this report obviously is the reason. But you know, I don't know. I mean, we're still speculating. We don't know if it's been invoked or not. And we know that relationships, you know, perhaps are bad. I won't be surprised if this gets bought into and, you know, and heavily bought into, because the market's mood is positive right now and global markets are positive and the market's created some kind of bottom. In fact, I won't be surprised if today you actually have a big rally in banks and NBFCs. Because, you know, a lot of price damage is actually
relatively banks and NBFCs will outperform anyway, because the Bank of Baroda is reiterating what we have seen in Union and other banks. And plus, if the, you know, even if there is a rapprochement, or if there is a showdown, definitely the liquidity tap is going to be open. The rapprochement will happen only if the RBI gives in to some liquidity measures. And the showdown, if the showdown happens, then again the government will go ahead and release the liquidity tap. So an outperformance of financials is given. But it will be an outperformance. We don't know if the markets will fall and financials will outperform, or the markets won't fall, they'll rise, but the financials will outperform. In any case, it's a positive day for PSU banks.
Okay, so we'll keep our eye out on that. Of course, Bank of Baroda's numbers really reinforce that confidence. We'll talk about all that and more on the other side of the break. Our list of top stocks to watch is lined up in just moments from now. Stay with us.